Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today started his financial career in 2008 and now helps professionals generate passive income through commercial real estate investments. Dovid Preil is the founder of YDLP Investment Group. Dovid, welcome to Purchase to Profits. It's great to have you on the show.
It's great to be here. Thanks so much for having me.
Yeah, we're really excited. We've got our international interview today, so that's always an exciting day for me. So let's kick things off and talk about your real estate investing goals. Like, where do you want to go with real estate?
It's a question of building out a portfolio. I started off with a personal in 2008. It was more personal, and my personal finances, investing it in the market. I guess I really started in 2009, back in January 2009, when the market was kind of hitting bottom. And the whole world was like, and I was losing money too. I also had money in the market then. Like, this is a really good opportunity. So I started actively trading at that point. And until that point, I had been in mutual funds. And so that's where I kind of started more in the stock trading finance world. And I developed a lot of my investment philosophies in that world. I shifted over into real estate. First, professionally, when I started working professionally. I was working as a mortgage broker in Israel, which is quite different than it is in the U.S., but I don't want to get into that right now. When I wanted to start investing other people's money and help people build streams of income and to build long-term wealth, I kind of gravitated towards real estate as a financial vehicle. So where I was talking to a lot of people who are in real estate, and they're always focusing on, this massive deal, that massive deal. My focus is always more to build a network of people I could work with so that I could help people invest their money in a range of deals, in a range of asset types across a range of locations.
Gotcha. And what sort of lessons, because you mentioned that you went from investing in the market to real estate, what sort of lessons worked really well in that transition that you learned?
Well, first, I still do the markets. I just do it mostly for one or two people, myself included. I don't do it for the people who are less sophisticated, who I feel are better off in real estate. One of the key lessons, and this is one of the reasons why I gravitated towards real estate for less sophisticated investors and people who aren't investing full time, and even people who are sophisticated individuals. You have doctors and lawyers, and they know how to read a prospectus and they understand numbers, but they're not in it. So one thing an important lesson which I learned, which I hope a lot of people learned back in 2008, is you always have to know where your value is coming from. If you invest you buy a house, you buy a retail center, you buy an office building, yes, there's the devil's in the details, and there's a lot of nitty-gritty operational you have to get right. But the basic concept of, we have people here who are renting space from us and they're paying us, and part of that goes towards the mortgage, part of that goes towards maintenance, and part of that goes in our pocket. It's simple enough that anybody can understand. One of the big fallacies in 2008 was that people were trading derivatives on top of products that nobody understood. And when you lose track of where your value is being generated, you don't know how to properly evaluate things. So real estate in that regard is very simple, and not in a bad way, just in the way that you understand where your money's coming from. So that was a value that I drew from the trading into the real estate world.
Yeah, and what was it that really made you take a careful look at real estate and shift gears?
Well, I was doing real estate in Israel. I was doing mortgages in Israel, so I was seeing stuff that was happening here, and I came across a large client base of people who needed access to quality deals. And being that I was in Israel, and the Israeli real estate market has its strengths, I started looking at deals over here, and that got me looking at deals not so much from a bank underwriting perspective, which was my perspective until that point, but from an ROI, IRR perspective. And what I saw was that the deals over here just weren't. There's certain inherent stability to them, but there is the profit levels aren't nearly as high as they are in the U.S. So that shifted me back to the U.S., and I started learning the market there, taking partners over there, and I mean, look, we're in a good time. I'm not going to deny the fact that coming in the last 3 years have been a good period. Really, the last 10 years have been a good run. But it's a strong market.
Yeah. And so what would you say is your number one challenge right now with your business?
One challenge. There's so many number one challenges. I mean, I'm just sitting here today coming up with different marketing campaigns and ideas of what I could do. And the number one challenge is there's not enough time in the day to get it all done. There's really a lot to do here. And it's just a matter of experimenting, finding the right ways to reach people, finding the right ways to bring value to people, to understand different people, where they're at, what they're looking for, and how to get the right people at the right time. So, I'm working much more online. I have a much more stronger digital strategy. If I was in the U.S., I'd probably be going to shows and meeting with higher net worth individuals. It's worth pointing out at this point that my primary strategy is targeting the smaller to mid-level investors. Our investments typically range from $20,000 to $200,000. That's what we take from people typically, which means we're dealing with a different type of clientele. And we're trying to reach that clientele, and it's a lot of these people are people who aren't even thinking about investing in real estate, and it's about educating them to the advantages of investing in real estate, to why they can do this, and how they can do this, and what they stand to benefit from it.
Yeah, for sure. And also dealing with international investors, it can also be a little challenging. I run into that myself because I'm bringing Canadian money into the U.S. What sort of things should an international investor look out for?
Right. So in the U.S. So I know this from the Israeli side, right? And I deal with two jurisdictions right now, the Israeli and the U.S. And I mean, one tricky part going into the U.S. that some of my investors face is, especially if you're not a U.S. citizen. Well, there's two issues. One issue is if you are a U.S. citizen, but you haven't been filing in the U.S. because, for example, you have situations where people are children of U.S. citizens that have U.S. citizenship, but they never ever filed in the U.S. They don't even view themselves as being American necessarily. But if they were to start investing in the U.S. with a social security number, that would put them on the IRS's radar, and they don't want that. Look, technically speaking, legally speaking, they do have to file, and the fact that they're not is an issue for them. I'm not encouraging anybody not to file here. We do everything above board, and everyone files. But that is a challenge that some people face. But what happens a lot also is you have people who aren't U.S. citizens, and for them there's two issues. There's, first of all, there's the, I wouldn't even call it psychological hurdle, because a lot of times people don't want to invest when it's so far away. Again, from Canada to the U.S. is already their neighbors, but from people from Israel to the U.S., where some of them don't even speak English for a lot of the materials put out, all the materials put out in, there's a barrier to feeling that you're putting your money very far away. People like to be able to know what they're investing in, understand what they're investing in, and it's not just psychological. There is a truth to that. There's a value to that. I just had a conversation with someone earlier today about that, and what we came out with was that it would be worthwhile, even so, if you have someone investing in multiple places, to put maybe 20% of their portfolio in the U.S., which is something that we can facilitate, and then they can start getting exposure to that market, because while they acknowledge the returns are better, until you become more familiar with the market and how it works, it's challenging. On a technical level, you have the filing requirements, which is not the biggest deal in the world. If you're investing at a normal level, you get your ITIN and you have an accountant and you file, and it's usually not that complicated. As a syndicator, one issue which I always have to bring up with people is there's withholding, because if you're a U.S. citizen, let's say you get taxed on the rent income. The distributions is regular income, which can be whatever it is, 10, 15, 20, 30%. If you're coming in as a foreigner, you have to withhold it at the highest tax rate, which is close to 40%. So I've spoken to different syndicators about how you package that on a marketing perspective. So, what I say to people is, you're going to put your money in, And in the first year, you're going to make about 40% less. Then once you file, already by year 2, then you're making the expected amounts because you have your makeup from year 1 and whatever you get on year 2, and then it kind of rolls off. I have one syndicator told me, he tells people it's like there are 5 distributions. You have your 4 distributions and the bonus distribution, and that's how you get to your annual amount. So the different ways you try to package that. Recently, I've been talking to some to actually a U.S. tax lawyer about how to legally let people invest in the U.S. without having tax requirements. We came up with a solution for that I haven't actually put into practice yet, but we have a way to do that using a different type of structure that we're going to have to try that out. But yeah, those are I guess the most significant challenges in bringing foreign money into the U.S. that I've encountered.
Well, for sure. And it's so important for an investor looking at becoming a foreign investor to find somebody who understands the nuances because you don't want to get burned in taxes because the government will find the money.
Yeah. No, there is. Yeah, I guess there's one last issue also is the death tax. That's also a big issue. Yeah. I forgot to mention there that if you're a foreigner putting money in the U.S., one thing you have to be very aware of is that after the first $60,000, they come after you. So that's something which I dealt with at one point. I've heard of different solutions. I've heard of different arguments between different accountants and tax lawyers if the solution actually works. So at some point I will probably go into that deeper. At this point with my client base, most of my client base are U.S. citizens, so it hasn't been so pressing. Mm-hmm. But that's another issue. Yeah.
Yeah, and you know what? Some of those issues, those are way above my pay grade. So
there you go.
Yeah, absolutely. So what sort of routines or rituals have you developed as a real estate investor that have allowed you to become successful?
Well, for starters, I guess on a very basic level, whenever we get a deal that we underwrite, we have kind of a system in place for how we do our underwriting so that we don't, miss things. We have me and my partner. I'm more the financial guy. My partner is a 13-year veteran, an analyst at a company for 13 years. He's underwritten $180 million in purchases. So we have our way of going through the deal where we make sure that we hit all the points we want to hit so we don't miss things. I basically recreate the underwriting on the financial side so that I can understand the flow of money through a deal, which really then tells a story about the deal. To me, it's not so important what the targets are. It's more important what how well the deal stress tests. So I'll play with the numbers, like I'll break apart the Excel, I'll figure out where all the money, where the flow is going, and then you can play with the numbers to figure out how well a deal stress tests, which is very important to us. Beyond that core operation, what my routines are, I'm active on LinkedIn. That's a major source for me. And then it's really it's about having the right cadences. It used to be like a lot of stuff was just coming up last minute. Oh, now we got to do this. Now we got to do that. And you kind of figure out where you have to create your patterns. This is more basic business stuff. I go in once a week and I just do my bookkeeping once a week so that all my transactions are up to date. So I don't have to so it doesn't come out like after 4 months, it's like, oh shoot, I got to go over 4 months worth of transactions, including all distributions, and then try to figure out where the issues need to be reconciled. So I learned that the hard way, just keep on top of that and it's not a big deal. There's a LinkedIn posting. There's, I write, I have documents and I'll use that for posts. I'll use that for more long form content. I try to find time every day to, a good half an hour a day just to be able to put ideas to paper and develop ideas. And then that serves as for a blog I have, it serves for my other posts, and we'll see where that content goes. More than that, within the raises itself, I have my KPIs and I focus on hitting those KPIs. And most of my KPIs have nothing to do with money. Most of my KPIs are about new investors that are coming in, how much interest do we have, how many new feeders do we have. We also have people who work under, I like the word underneath it, the people who syndicate, who work with us. People who trust us, they like how we vet our deals, they like the kind of deal we bring to the table, they like the opportunity we bring to investors to come into deals. So what I like to do is within every deal, I use a raise not just as an opportunity to raise funds, but as an opportunity to expand the operation base. So there's modes of expansion during a raise, and then there are modes of expansion between raises.
Yeah. Well, actually, let's go into that. Can you break down what you mean by before the raise and during the raise and after the raise in terms of expansion?
Right. So it's really more during the raise and not during a raise. When you're in the middle of a raise, it's easy to approach people and say like, hey, I've got this deal I'm raising for, so you can introduce yourself as somebody who's active. It's when you're in between raises, and most time is spent in between raises. My target for the year, our target is to do 4 raises a year. That's enough money to do some nice businesses, and that's enough time to get people into quality deals. People who want to diversify, you start to do 4 deals a year is a very good cadence. Again, if something really good comes up, we'll take it, but we're not looking actively to do more than that. It's 1 deal a quarter, which is very solid. A deal takes a good, 5-6 weeks to do start to finish. So when we're in the middle of a raise, we'll use that almost as the introduction, something we can talk about, and something we can approach, other syndicators about. Say, hey, we're raising for this deal. Are you interested? And that will kind of bring us into bring them into our orbit, and we can kind of start talking with that, something actually on the table. A lot of people say, talk to me when you have something on the table. It's hard to not want to talk to somebody. If you're going to talk to somebody at any point in time, it's going to be during a raise.
Yeah.
So that's what we do at that stage. In between the raises, that's when we focus more on, implementing the other strategies or tweaking the strategies. Are we going to be like, there's always more to be done in all the marketing. And so, do you want to tweak the website? Do you want to create a new piece of value for people and try to use that to draw them in and strategize a bit about the marketing? I've used different strategies over time to build my mailing list, to build my WhatsApp list. And I'm still just figuring it out. It's marketing is a never-ending game of trial and error, and it's kind of funny because it's real estate is one of those things where you really plan a lot in advance. You go in and you run all the numbers, and you have your Argus sheets or you have your Excel sheets with like 1,000 sheets and 1,000 cells, and you plan out like every little rent increase and every little expense, and you plan it all out, but then to do your marketing, marketing is the exact opposite, where it's just got to keep throwing stuff at the wall and see what sticks. Obviously, you have to have strategy, you have to think it through, but a lot of the game of marketing is trial and error. So It's a very different mindset. You have to do it, and so that's kind of what we focus on in between raises, is just kind of getting people in, exposing them to the content, exposing them to the newsletter, exposing them to what we put out there, and the people who it resonates with, they kind of come into. They start getting our newsletter, they start getting our email list. When I started this thing, I was like who's going to want to read what I have to write? But okay, I have more people today on my newsletter than I thought I'd ever have. And it's not huge, but I'm not trying to brag about it. It's just, you put out, you learn how to put out good quality stuff. You keep putting out stuff and you get better at it. And, eventually you think oh, I've been doing this for a few years. What do I know? But, you know a lot more than a lot of other people do. And you can help a lot of people with that.
Yeah, no, and that's such a good point, and I'm glad you brought it up, because many real estate professionals, that they don't realize that they actually hold the key to a lot of secrets in their head that many people don't even know exist. And it's kind of hard to think about yourself as, people actually want to know what I know, but it's true. You just have to start putting it out there.
Yeah, 100%.
So let's hop over to a keystone deal. So a deal that made a big impact on you and your business. Is there one that comes to mind?
Big impact. I mean, a lot of deals have had an impact. What do you mean by an impact?
Well, there can be a good story. There could be a lot of problems that you fixed, or it could be a home run.
Right. So a lot of our deals are still, we started raising equity about 3 years ago. So we've had a couple of closings, but a couple of deals that we've exits, I should say. Most of the deals are still live. Mm-hmm. I guess I'll just share. We just had an exit. It was a nice exit. It was a really nice exit. And this is good for us because it's good for us in obviously we get investors' money back and then they can reinvest with us, and it looks really good. It also works out well for us because on that type of deal, the way we structured it, we have a bit of a share after the capital event, so we're getting a little bit more money coming in now. But it's just a really great great solid deal all around. And this is something which one of the things that we do as really focused on syndication and working with we work with a range of partners, a very small group of partners. And so once in a while, the opportunity comes up to do a buyout where someone is in the deal and they want their money out. So we're able to, come in. It's not huge money usually, but it's typically a good opportunity, depending on the situation. So we had a situation about a year ago. It was must have been June or July, that there was a sponsor we were working with he himself had put in a little bit more money than he wanted to when they purchased the property a few months earlier, and he wanted to get the money out. So we brought in some money. It was a small amount. It was $300,000. We put the money in the deal. This was an office deal in New Jersey. And we closed it on, I'm going to say July 1st, we closed it. So when we took ownership of the building, this is true from when they purchased the building originally, it was 80% occupied. Now, office in New Jersey in the last year has been outstanding. We have another office deal in New Jersey also. It's doing phenomenally well in terms of lease-ups. This building went over Q4. It went from 80% leased to 97% leased.
Wow.
So we hit our target on that right away. They submitted for refinancing, and there was a little bit of a hassle. I didn't get the full story yet as to exactly what happened, but we were able to get out 35% of the initial investment as of August 1st. So aside from the cash flow from year one, the investors basically got back 45% of their money between cash flow and return of equity within 1 year. And now they're just sitting on a much higher cash on cash based on the equity left in there, obviously, and it's been a great deal. And that was great for us. We saw the operator the operator really came through on this one. We got better cash flow. Our investors get better cash flow. And it was also really interesting for me because one of the investors, this goes back to, just investor relations, which syndicators really need to focus on because, that's the name of the game of syndication, is one of the investors didn't understand exactly what was happening. And somehow he felt that the sponsor was basically trying to kick him out of the deal with his own money.
Oh.
And this very negative perception of what had happened. And we get on the phone. I'm trying to walk him through, trying to explain to him, step by step. At first I started with, what if you get back all your money, but you still keep 70% of the building, and then you get back half your money, and you keep 70% of the other of that half. Trying to show him how you're getting better returns on you're making less per year now, but it's not even a smaller amount. So your returns are actually better. And it's walk him through that process to realize that something good had happened. Because this is something, a refinance is the kind of thing where if you're in the field, you understand it. And it's you hear refinance and you're like, that's great. It's
you're doing your happy dance. Yeah,
exactly. I heard that. I'm like, it's great. Refinance. I'm 12 months, you did refinance. This guy, but everyone, especially the people who are starting off, earlier stage investors, they don't fully understand these things yet. They don't appreciate these things yet. And you have to kind of walk them through it to show them how it works. Then they can appreciate the kind of value and benefit they're getting from this.
Yeah. And you know what? I'm really glad you brought that up because I think sometimes once you're in the business for a while, you almost forget that people may not understand exactly what's happening there.
Right.
Yeah.
Look, the first time it happens almost every time the first time investor, they get their K1s and their K1s show a loss. And they're like, wait, what happened? They said they're making money. I'm like, yes, they're making money. This is a tax write-off. It's a good thing. Yeah, exactly.
Yeah, for sure. And what was it about this deal? Because, you leased it up really quick. What was it when you originally saw it on paper that attracted you to this deal?
Again, it wasn't me. It was my partner. We only syndicate. We work with GPs who are local to their areas and focused in their areas. So what attracted me to the deal was first and foremost, it was the personal connection. The person came highly recommended from somebody who me and my partner know very, very well, who's in real estate. He's in the field. He's been in the field for 15 years. He himself has had investors invest with this guy successfully many times. The deal itself was very carefully underwritten. We saw the numbers on it. It was well done. There weren't mistakes. The area itself was good. The demographics were strong. The building was a strong building, and it underwrote well. It stress tested well. It underwrote well. So it had a good situation going in, and we in terms of that, we just got lucky in that office in New Jersey, the last couple of years, going back more than a year before that, office was kind of soft. The last year, it's been stronger. That's the kind of thing and that's why we diversify, because you never know exactly what sector is going to be a little stronger, a little weaker. So, you spread your money around. I have this time all the time. Investors ask me, what deal is better, this deal or the last deal? It's looking at a deal with one's with a 17% IRR, one's with an 18% IRR, one's a 105% ROI, one's a 97% ROI. I'm realize fundamentally speaking, these are all identical. You have to plug numbers in, you have to have your projections, but fundamentally it's all the same, because this one you can sell for a slightly lower cap rate, a slightly higher cap rate, and you can't know these things. You diversify, you spread your money around, you diversify your risk, and you also give yourself more exposure to upside.
Yeah, no, 100%. And nobody has a crystal ball, right? So you can excel, all day long, but things can change.
Absolutely.
Yeah. So how has real estate, how has getting involved, especially on the syndication side of real estate, changed and impacted your life thus far?
It's been pretty good. Syndicating deals, I'm making money. My investors are making money. I'm meeting a lot of interesting people, and I do this as I like to be able to bring. I started doing this, and I do this to be able to. Obviously, I'm making money doing this, but I'm doing this to help people kind of break in. People who are starting out. My investor base, I mentioned before, is usually smaller investors. These are people who are either based abroad, people based in Israel, and they have their 100,000, 200,000 total to invest. I have a number of investors who are U.S.-based investors, accredited, but not sitting on millions of dollars to invest. They like to invest in $50,000 to $100,000 at a time, and this affords them that opportunity. And when I get to do these type of deals and bring these people into deals and give them cash flow and give them growth that helps them, that's great.
Yeah, and looking ahead 10 years, so a decade from now, where do you see yourself with your business?
10 years. I like it. I'm 5 years, and lucky if I can think about tomorrow. I would like to start at some point. We do have ideas to start GPing some deals. It's definitely in the cards. I wouldn't drop the syndication model just because the core business is about helping people diversify. What I really want to do, the core mission here is to help people financially, to help people, educate people about their finances, and educate people about there's so many pieces to that, so many pieces to what personal finances means. You have the personal spending side of it, you have the debt side of it, you have the investment side of it. There's so many pieces to it, and what I like to try to do is try to give people as much ideas in that regard. As obviously there are lots of ideas out there, and my voice is just one of many. But again, there's a lot of people who at this point who are listening, and it's to me the goal is to be able to educate as many people as possible to make smart financial decisions so that they're in good shape. It's just to be able to just to think more intelligently about money. Just as an example, I had this conversation with someone recently. They're like, why do you work so hard? You'll have your pension, you'll have your this, and you'll be okay. And I'm like you tell that to all those people who for the last 50 years are counting on their pension, and they were counting, and then all of a sudden we had 2008, and now interest rates are in the floor, and they can't get more than 1.5% on treasuries. Their entire investment plan was destroyed. I know people. They saved up. They saved. I have people that lived in the UK, and for a long time they were planning on retiring to Israel. For the longest time, the exchange rate between the pound and the shekel in Israel was 8-1. Then they moved to Israel. All of a sudden, you have 2008, 2009. The shekel gets a lot stronger. Now it's at 5-1, and it's not going back. And these guys moved here, retiring, planning on living on that, and now their money is cut, and they lost 30-40% of their money.
Yeah.
So you kind of build this plan based on it. You have to understand what your assumptions are. And they weren't even thinking about that, because a lot of people don't think about currency risk. They don't think about interest rates, and they don't realize these are very real things that are going to impact your life. So you have to start thinking a little bit a little bit deeper about money. And this is not beyond the ability of most people. I really believe that most people can do this. I think most people start hearing about money and they hear numbers and like they just gloss over and like, oh, I can't do that. But like come on, you're a doctor, you're a lawyer, you can even be an accountant for all I know. You're a plumber. You're not an idiot. Most people can do this. I really believe most people can do this. I believe in people. I'm a very optimistic, positive person. I believe people can do this, and it takes some time. And you don't have to understand everything overnight, but just to begin to get control of your finances, get control of what's going on, and understand it, and that way you can start to build for yourself a bit of a more robust, risk-resistant retirement plan and investment plan. I think that's something which most people are capable of doing, and most people just don't even think about it.
Yeah. Oh, 100%. So if somebody does have questions or if they want to reach out and get in touch with you, where can they find you?
So LinkedIn is a great place to find me. My name is spelled Dovid Preil. Also, you can check out my website, ydlpinvestments.com. It's a little bit antiquated. It's in the cards to be redone soon. But there's a contact form. There's an email list. And those are the best ways to reach me.
Oh, that's perfect. Well, Dovid, I just want to say thank you so much for taking the time joining us and sharing all those great tips.
All right. Appreciate it. Thank you so much for having me. This is a lot of fun.
Yeah, pleasure was all mine. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.